Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, March 13th, 2019, and this is the Daily Report for Gold and Silver. A vote down of the hard exit or Brexit that came before the UK Parliament today was voted down. This was extremely bullish for both the British pound as well as Eurodollar and took the US dollar down about 0.4%. That was part of the reason we saw a nice upside move in the precious metals across the board. The second thing is market sentiment continues to be bullish. We have seen the stock market trade higher along with gold, both in response to a patient Fed. And as long as those factors are in the market, meaning what Britain's going to do in terms of their exit, as well as a patient Fed, we could in fact see the precious metals continue to trade higher. I certainly believe that will be the case. Gold closed up substantially higher today. Basis most active April contract closed at 1310.20, or is currently fixed at, and that's putting it up about $12.10. Of course, we do have a trade, and our trade is in the June contract month, which is currently at 1316.50, up $12. Of course, we are long at 1305. Silver, nice gains on the day today, gaining about 5 cents at 1546. Platinum having a good day again, up $13.60 at 845.50. And lastly, palladium continues to rock, breaking once again above 1500 after experiencing a $22 plus gain on the day, 1512.60. Traders, interesting action in the precious metals markets. The first chart I do want to look at today is spot gold. It's currently up about $8 on the day. However, I've just put up the Kitco Gold Index, and at the time I took this screen print was up $9.40. What you can see from the Kitco Gold Index today is in terms of spot gold, it was predominantly dollar weakness that actually bid the precious metal higher, almost to a 2-to-1, because what we're looking at is a net gain of $6.25 directly attributable to a weakening US dollar and market participants bidding the precious metal higher, accounting for $3.15 of this 940 gain, which is definitely a different mix than what we're seeing in the futures market. We are looking at a daily chart of the most active COMEX contract, the April contract, currently trading up 1160 at 1309.70. The net change on the day is about 0.9%. And when we look at the dollar index is down about 0.5%, which tells us that in terms of dollar weakness, it certainly had a greater effect on the spot market than it did on the futures market. Nonetheless, we do have prices off a little bit of their highs, but still substantially higher on the day. A couple of very important things that we need to take a look at. And first of all, we talked about the fact yesterday that I believed it would be easy but necessary for us to see gold prices breach the shortest term moving average that I have up here, the green one, which is a 50-day moving average. We also have the proper order, 50, 100, and then 200, which means that on an interim, short-term, and long-term basis, the technical indicators are very bullish on gold pricing. The second thing is our next level that we're really going to have to look at. And as I said yesterday, I think that there's a potential for some minor resistance, but this market is moving on fundamental factors. And because of that, if we continue to see the fundamentals in play, a Fed that is patient and concern about Brexit, we should see a continuation of this upside move in the precious metals, specifically gold. But our next area that we do want to look at, and this of course is basis the April, is 1314, and that's the 0.23% retracement level. What that tells me is that we came very close here, but you're going to see a small difference when we pull up the June contract, which is what we are currently trading. And traders, I have just pulled up a June gold daily candlestick chart, and I've got a couple of different things that we want to look at. First of all, based upon the fib retracement and our count itself, you get a little bit different of action, because what we're seeing is that we are much closer to the 0.23% retracement, which on the June comes in at 1317.90. than we are when we looked at April. The difference is the low specifically here comes in around 1189, whereas in our April contract, which I've quickly pulled up, you can see comes in much lower at 1166. We also top off here at 1349.80. And in our June contract, you can see the difference. We have these highs really at 1356. However, in terms of my target pretty much remains the same. I'm going to look at these targets basis the June contract because that is what we are trading. And what I'm looking at and what I've done is a simple extension. I'm looking at a wave 1 count, then a wave 2. I see this as our wave 3, the longest of any impulse, and then the conclusion of wave 4, of course, is here, and thereby we've got our 5th wave beginning here. And so what this line up here represents, which is 1374.70, is the 0.618% extension of wave 3 as a way to calculate a possible move on our wave 5. And therefore, depending on the action that we see, I believe that we are going to take out, as I said yesterday, the price of 1350, 1356, the former high in the market. So traders, my recommendation is to maintain our current long position, to maintain our current stop level. We will look to move that up probably later this week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.